Thanks for your interest in International Tax course videos. If you'd like to purchase the entire course, click the link in the description. If you're watching this on mobile, you can click the downward arrow here and it will show you the link to purchase the entire course. So what are the various models of tax treaties and what do they stand for? When I talk about a model tax treaty, it is just like a standard agreement which is considered as a starting point for negotiating treaty. Like I told you, a tax treaty is an agreement between two countries, right? Instead of starting afresh, there are certain models which are available which can be used by a country to draft a tax treaty with another country. If I have to look at it, there are basically three key models which are looked after insofar as a tax treaty is concerned. The first one is the model OECD model, which is developed by Organization for Economic Cooperation and Development, right? And this is the one which is used by a large number of developed countries when entering into tax treaties. The second one is the UN model or the United Nations model. Typically, the difference between these two models, if one sees, is that this is quite of more balanced act, whereas if you see the OECD model, in many cases, some of the clauses there which people believe and there's a perception is that they are a little balanced towards the countries which are developed, whereas the UN model kind of considers both the developed and the developing countries' interest when starting at the draft model. And the third is the US model, which is used by United States when entering into tax treaty with various countries. Now, each of these models have a detailed commentary attached to it, which kind of puts in as to what those clauses are, what is the reason for the existence of those clauses, why have they been considered in the way they are. So when interpreting a treaty which is based on a particular model, so let's say if you have a treaty which is based on OECD model, you should make a reference to the OECD commentary because that will tell you why a particular treaty or why a particular clause has been put in there. Obviously, when interpreting, use the latest version of the commentaries unless there is a change in the language of the model itself. Right? For most of the treaty that India uses, there is a use of the UN Model Convention.